What's going on, people? Welcome back to the channel. So last week we didn't have a video. I was actually stuck on an island with no Wi-Fi and no possibility to actually make a video, so I do apologize for the wait, but we are back finally with another video. And in this video I wanted to cover the topic of when should I go down to the lower time frames. And I think for me personally there is three main times in which you should go down to the lower time frames, and we're going to cover those in this video. So the first one of these three are going to be looking at inside a higher time frame POI. Okay, so this is obviously in the way of looking for continuations. So when we're looking to place our trades, we're not looking to take reversals, we're not looking to predict where the market wants to go, we're just looking to react to the market and continue in the way that the price action is forming. So if we can get in line with price action and continue in the lower time frame direction that price is actually pushing, then ultimately we can look to increase our win rate, we can look to decrease our stop loss, which means an increased risk to reward ratio, and ultimately we're just going to stay out of a lot of bad trades. So let's look into a higher time frame POI. Okay, so if we go onto the daily, for example, I know this is an 8-hour POI right here. Okay, so if we look over on the left hand side here, we can see there's no kind of POIs in here. What we can do is just drop down to a lower time frame, so we can go to the 8-hour, and what we can see right here is, if we can get to the right place, here we have a down close candle before the push to the upside, which breaks structure. Okay, this is a valid POI, so we can mark that off, and then we can look at current price action. Okay, so here we can see we are currently inside of this 8-hour POI, and then what we're going to be doing is looking and waiting for the market to show us that it has bullish intentions and that it wants to continue to the upside. So from here, what we'll be doing is we'll go down onto the lower time frames, and because this is a decisional POI, right? If we look all the way to the left side, we'll go back over here. Okay, so right here we can see this is not an extreme. This is literally just inside of this massive leg, this big leg that pushes all the way up. This is a decisional, right? So what we need to do is we need to wait for two things. We need to wait for a change in direction, a change in character, and we also need a flip. Okay, so getting back down onto the hourly time frame, what we can see here is we have this low, which initially taps into the 8-hour POI, and then we kind of pull back up, and then we push lower again and we take out this low. Okay, so this is where we can then see our initial change in direction, change in character. Okay, and then this is the high which got formed after putting this low. Okay, we can also potentially look at this high here, because if we actually go on to, let's just say, a 15-minute time frame, we can most likely see that that is the high. Yeah, so this is the high that is formed in between this low and this low. Okay, this is the highest high. Okay, so this would be where our change of character is. Okay, so moving down to a lower time frame here, what we understand is if this is going to be a valid POI that we can trade from, like I just said a moment ago, we need a flip also. Okay, so what we need to do is we need to look for an up close candle before the push to the downside, which breaks structure. Okay, so this is where our first change of character comes in. Okay, and we need to look for a reaction from this place. Okay, so here we have an up close candle. Okay, we can mark this off as a flip, because what's happened is we've pushed to the downside, we've returned into this zone, and then we've pushed lower, creating this area here. Okay, so which is ultimately our break of structure to the downside. Then once we start pushing to the upside, we then have our confirmed change in character, and then down here on a lower time frame, or potentially on a higher time frame, what we have is somewhere to look for a POI. Okay, and that is typically the last place in which price sold off before pushing to the upside, breaking structure. Okay, so that's exactly what we're looking for. Everything on the higher time frame now has been built. So what you would then do is you would then wait again on the higher time frame, and you're going to look at, okay, when can I get into this trade? Okay, what is now possible? Okay, so as we can see on the hourly time frame, we have the change in character. We also have the up close candle. So from this point down here, what we can actually do is you can get down onto a lower time frame inside of a higher time frame POI. Okay, this is one of the main points, one of the 3 points which we're going to cover in this video. So going down onto a lower time frame once you are inside of a higher time frame POI. And for me personally, I class anything from the 15-minute and above as the higher time frame. Anything lower than that, if you look at my lower time frame box, if we just go like this, lower time frame, this is everything from the 10-minute downwards, okay? And then once I get into the seconds, for me personally, that is a white box, okay? So this is everything down from the 15-minute, and then this is the seconds, okay? So exactly the same again. We're now on the 1-minute time frame as we are inside of our 8-hour POI, okay? So now what we need to do is we need to look for exactly the same thing. So we need the change in character, because what we're doing is we're now inside of the 8-hour POI. Our higher time frame change in character and flip has not confirmed yet, right? So now what we can do is we can get down onto the lower time frames and look for the same thing, and then we can look to continue that to the upside to then get a higher time frame change in character and flip, and then we can look to really accelerate this and take this all the way up. So here we have our flip, here we have our change in character, then we have our last POI. Here is where we can take our trade from. If you want to get even more refined, you can use this down close candle right here, okay? This would be your absolute last down close candle before this push to the upside, which eventually breaks structure. So the second time we can use the lower time frames is when we go down from the higher time frames all the way down to the 15-minute. We then find a leg in which we can look to trade from. But inside of this leg, there is unfortunately no real nice looking POIs on the 15-minute time frame. So what we can actually do is we can use the lower time frames in this example here. So if you look, currently we are very bearish in this scenario. Okay, so what we do is we have a break of structure, and then we are continuing order flow. So we have a POI, so an up close candle before the push to the downside, comes in, retests, and then breaks lower again, comes in, retests this zone here, and then we start breaking down pretty rapidly. Okay, so once we start breaking down rapidly on a lower time frame, what we can then do is drop down lower again, and then everything inside of the premium in a bearish scenario we can look to use as a POI. So moving down through the time frames, what we can see here is we have 2 potential POIs in which we can use. So what we need to do to identify those is keep moving down through the lower time frames. As we can see right here, we have this last up close candle before this push to the downside. We can mark this off, and then we also have this up close candle here, which if I just drag this back, you can see this one here is the up close candle before the push to the downside, which breaks structure, okay? Also a valid POI. So what we can do is we can mark both of these 2 areas out, okay? And then ultimately what we're looking for is is this a decisional or is this an extreme, okay? One thing that I really think that you should all do is stop focusing on entries so much. Try and understand price. Work out where your extreme zones are, work out where your decisional zones are, and then once you've got those down and once you understand, what you need to do at each zone, then you can start looking into your entries, because that's when it matters, right? If you don't know what you're doing at each zone, then there's no point in getting an entry. So to recap, when price has a very sharp movement to the downside or to the upside on the 15-minute time frame, and you can't really see any POIs other than we have this one here, okay? Other than this, what we can then do is we can use the lower time frames to get into this down, this push to the downside, and see if there's any POIs inside of this area on the lower time frames. This is the only time that you're really permitted to do this. If you do this on every single leg, you're going to get absolutely ruined, because there is so many POIs on the lower time frames. You need to do this when there is no higher time frame POIs. And finally, the last way that you can use the lower time frames to get your entries is when you have all of your higher time frame narrative built. All right, everything is already there, everything is ready. You've got your bias, you understand which direction you're wanting to trade, and then you actually miss your entry, okay? So this is obviously quite devastating. Sometimes people miss their entries and then they go crazy. Sometimes, you know, you miss your entry and then you try and just take a fluke entry just to be in the trade. For me personally, I don't think this is a very good trade. I think this is then getting towards something like gambling, right? We don't really want that mentality as traders. We want to be systematic and we want to be consistent in the way of following our trading plan. So let's just say, for example, you wanted to take a trade from somewhere in here, right? And then price doesn't come back down into it properly and doesn't really give you an entry. And then in here, let's just say, for example, you don't have the seconds time frame. You're not able to analyze this, you know, with absolute precision, as you can see that is here, right? You can't see all of this stuff inside of this price action. So you're not able to get into that, right? And then you have here, this last down close candle, you can use this as a POI. Same again, inside of here, you can then look to take your entry, okay? So using the lower time frames, once your entry has already taken off, what you then need to do is, of course, you still need to use the higher time frames because you need the highest probability POIs to be able to take, you know, the continuation from. But there is ways, especially in my mentorship, what I teach my mentorship students, how to get into a trade that is absolutely taking off in a safe and probable manner. Okay, so just to recap the video, the 3 main points that we're looking to trade on the lower time frames, or to use the lower time frames mainly, okay, are inside of a higher time frame POI, number 1. When you cannot find any POIs inside of a range which has, or inside of a leg which has, you know, pushed down relatively fast, and there is no higher time frame POIs. And higher time frame POIs are 15 minutes and up, number 2. And last but not least, when you miss your entry, you can use the lower time frames to use the same model, okay? Don't forget where you're coming from. Don't forget what you're doing, okay? You still need to follow your plan even though you've missed your trade, okay? So you still need to back yourself up. You still need to look for the same model and then look for continuations on the lower time frames, number 3. So if this video helps you guys, be sure to drop a like, comment and subscribe, and let me know in the comments if you want to see anything specific in any future videos. I hope you all have a great trading week, and I will catch you in the next video.